thank you for inviting us to be here, and thank you for coming and to share your big knowledge about AI to the public. The first thing is I want you to introduce yourself so everybody can know who you are and then contact you if they need it. So please, go ahead.
Hey everybody, I'm Ted Yang. So I am not sure, okay, it says Product Mind. I have a bunch of different entities, so I'm unclear, but I am an investor. We have a venture studio that's called Phalanx, and Product Mind is actually our speaking entity because I also have a book called Ageless Peak Performance, and I'm doing a masterclass tomorrow, so that's the advertisement for that if you want to go see what that's more about, but that is more about human AI. So we do enterprise AI investment, and we mostly fund our own ideas. So we're looking for kind of entrepreneurs to carry along kind of the original thesis companies that we have, and we're only looking really kind of B2B plays in the AI space.
Please, go ahead.
My name is Ross. I'm from Adara Ventures. Adara Ventures is a firm here in Madrid, so I'm Scottish, but I'm technically a local here in Spain. I've been here for a decade. Adara is investing from its fourth fund. We invest in enterprise deep tech, relatively sector agnostic, but always at the very earliest stages, so pre-seed, seed, Series A. And we consider ourselves to be built for technical founders, so domain experts with deep engineering experience that are looking to solve the most complex problems, always for the enterprise, so we don't do any investment in consumer.
Please go ahead.
I'm Sami from Zigzag Ventures, and as the name indicates, that's the journey that entrepreneurs take to build their startup. The company I run does three things. We are an operator of programs, incubation, acceleration, and other types of programs to support entrepreneurs at the early stage. We have a fund as well, and lastly but not least, we did have a side hustle part of the fund to help startups validate their ideas so that they do not waste our time or their time when they come to us and they already have validated it. And this kind of side hustle now is growing a bit faster than we thought and might become a separate tech startup as a byproduct of what we do. Not something we predicted or planned for, but it's gaining like 27,000 users and we haven't even officially launched this anywhere. So that's a little bit it.
Thank you so much. Well, I'm an investor too, but today I'm not going to talk about...
No, come on.
No, that's right. I mean, I'm coming from CDTI. We have a capital risk company called Invierte that is financing this, obviously. And we have invested in 2 years and a half, around 3.7 billion so far. As Adara has mentioned, we are agnostic about sector as long as they have technology. Obviously, we like the early stages, but if somebody needs to scale up, we study it, but it's not our preference, obviously. And in any sector, strategic sectors and non-strategic sectors. So if you need an investment, we are here as well. But we have to go with a private one. We are, for example, LPs of Adara as well. And we are fund of funds, and we co-invest directly in companies. We have to always, the company has to be private, so it's €1 private, 90 cents from us. And so we do co-invest and fund of funds.
And just to say that in Spain, that's a big part of the ecosystem is the public money. So the private or let's say hybrid in that sense, right? And on the venture capital side, deploying as an independent fund, there are schemes of co-investment which are hugely attractive for entrepreneurs. And you're an LP in our fund, one of our biggest LPs.
Yeah.
And one of our nicest and friendliest LP as well.
You don't need to say
that way, yeah,
right. We love you.
Yeah, we are in fact right now in around 40 funds already, and in 150 companies directly invested. So we are in mostly all the funds that had technology, so we cannot complain.
Exactly.
All right. Today, we want to talk about AI. Investing in AI is no longer just investing in AI because it is the sake of AI. What do you look for investing in an AI company? What is your your view to put your money in that company? What do you
Yeah.
say?
So I think everyone in the audience knows that every company is an AI company right now. So as opposed to a couple years ago when people said, "Oh, well, I'm an AI company and then I can get funding," now that doesn't really help you. And I think it is quite difficult for most places to get funding. So I'm from New York. Sorry, I should have said that. So I don't know the Spanish market, but in the U.S. market, it's not as easy as you might think that it is to get funding. And so having AI certainly is not enough. And I think everyone has heard about the SaaS apocalypse. You've heard about that. So the question is, what works? And I hate to say, not much. Okay, there is a lot of fear in risk capital deployment. I mean, that's the honest answer. Okay. And the reality of this is that in terms of what may or may not work for AI, I think people are looking for business models that are distinctive, that are going to last. And so the 2 or 3 things that we are looking for are all one in the category of what's called unfair advantage. So real workflows that are meaningful, right? Not I put a workflow on top of Claude, not I've created a workflow that people are going to hate, but a deep embedded workflow in perhaps even a niche industry. It doesn't matter, but it's something that's deep, that is not going to be disrupted, and that people are going to continue to use. The other one is proprietary data. Now everyone says proprietary data, but I really, really mean this, right? Which is day one data that has immediate marketing value, right? Or marketable value. I should say marketable. So in other words, if the company were to fold, this is an actually balance sheet asset that you are creating for real. Okay, again, everyone says that, oh, well, this is good. I have this critical mass of data and someone is going to buy it. No. Okay, we know companies that evaluate that right now. And if it's real, then it's not real. And 3, it goes back to because execution, I think, is so much easier than it used to be for the early stage companies, right? We're looking for traction. Okay, we want to have ideas that are going to make rapid traction, whether it's our ideas or someone else, as proven by the market. So deploy right away, get it out in there, imperfect as it is, and just show it. Because if you have not done that, and then if you want to be an entrepreneur that wants to work on one of our companies, and you haven't done that for your own ideas, why would you do it for mine?
Yeah.
Right? So get out there and deploy and have product out there. So those 3 things.
That's good. Good answer.
Oh, it's an awesome answer. We can just go home, I think.
All right, beers after this. Let's go.
Look, I would just expand on what you're saying, and the rules of defensibility have changed, right? As AI transforms technology, transforms sectors. So you talk about data. There are various ways to build moats in your product or in a market. The most obvious ones are physical, right, or regulatory. So if you're playing with a regulatory tailwind behind you, it's harder for people to copy or to enter into your market. But if you take that all the way down to the other extreme, I think there's been 11,000 sales tech companies have been born in the last 18 months. Now, if you're going to make a bet on a sales tech company, how are you going to decide which one's the best? If you want to play in that space, you've got to go for the best team, right? We would avoid the space in its entirety because we think that the switching costs are so low in that kind of category that it's a bloodbath. Sooner or later, even if you have the traction at the beginning, someone can outspend you and catch you up. So the other thing I would say is there's not like a fixed prescriptive thesis on AI across all sectors. So you need to understand, I guess, the supply chain and how the value accrues at different parts of the supply chain in each sector. So one of the things you were talking about there, like proprietary data, if you go into pharma and health, you can access proprietary data, but you need to be approved. You need to have certifications to get it. So that's a moat that's there. If you go into the real world and you start digitizing the real world, you're creating a new data set. So that is only for you. But then if you're trying to replicate across many of the existing SaaS categories that are out there and just say that you're an AI native company in that category, it's very hard to build value on the data. You need to be doing something very different to build value.
No, so if I were to preempt this by a couple of things, I guess the market today is very noisy for any investor. There's a lot of noise and a lot of things happening that we cannot put our fingers on it and say, oh, this is real value, this is fake value. And also the market is moving and progressing very fast. Like a year ago, if you tell someone that the startup is doing an AI wrapper, that would be very derogatory. Like this is not something that anyone wants to invest in. This has changed today, and being a wrapper is cool again and trendy and more than that. And if I were to take a more abstract view at what kind of startups we should look into as investors and the ones that maybe we are not as much interested in, I think there are three aspects of things here. Like, I think to build something defensible today goes back to more softer things than we used to look at in the past. So the team is definitely important, and everything that you guys said is 100% important. But what I would add to that is there are today what we call the orchestrators. And the orchestrators are those who are able to build something that covers a certain industry with a lot of context. And context is huge. It's very important. And maybe very soon we're going to even lose context. That's going to be a different problem to have. I can share in a second why that. And the third thing is having the right structure and workflow. And if you're able to be that orchestrator who puts things together, bring the context and put them in the right structure, that could make you a winner. And that could be a startup in the future made of a couple of people, not necessarily 10 or 100 people to grow and make value. And on the point of like what makes this kind of orchestrator work or not and the context, like historically we used to look at startups who are solving a real problem and who have the right passion to solve for it. And this comes from context, meaning you start, 22 years old, you get a job, you have an experience in a certain industry and field, and you face a problem. You get very passionate about that problem that you want to go and solve it. And now AI is replacing all this bottom layer of the pyramid in people having entry-level jobs because AI can replace a lot of these jobs. So this context will become much more rare to find, and something else will come up that we might not know yet what that is. So there is this kind of futuristic complexity that we are trying to think of at the fund, but at the same time, I think for today, an orchestrator is good enough for us.
Okay, good. And what about the teams? Because when we invest, we look very much to the team that is running the companies. Before, we were looking for some experience like a startup life, startuperos, we could say it in Spain, right? But now, I think you look for other skills, no? What kind of skills do you look for the team, for the people who is in the teams of an AI company? Yes, please.
So I think it's an interesting question, because I would actually say that it's probably more the same than not, because I think that now it's about the skills don't need to be as deep and specific necessarily from your initial team, right? Because you can use AI, this is partly what my book is about, to make up for the deficiencies that you might lack in your founding team. And then again, for example, I don't need a technical co-founder, right? It's the most obvious. I'm going to go vibe code that and deploy this. But okay, fine. And that might get you some of your seed money, but it's not going to get you much further than that. You do actually need a technical person. So I don't think it's actually changed that much. I think it goes back to the bias to deploy product, right? And be willing to test hypotheses and fail a lot in the market, right? I think that is the key part of entrepreneurial mindset that you have to have more than ever. Because it is prior, the cycles were much slower, right? And so you could say, oh, I'm going to take some time, I'm going to figure this out. But if you're that kind of a person, I honestly think that you're not going to get funded anymore, okay? I don't think any VC is going to sit there and say, I really want you to be deliberative. Now, unless it's like a IP, something you spin out of a lab or something like that, right?
If you're, the honest truth about AI is it's like the great equalizer, right? So we all have the same access to these tools. Not just startups, but also incumbents. So it changes like the competitive landscape. Used to be the startups were the innovators. Now the incumbents have more resources, more access. So we're in this really strange, volatile moment, and particularly at the very beginning of company inception right now, one of the things that we're seeing is when we're seeing serial entrepreneurs come back. Serial entrepreneurs close their existing business because they want to start a new company because they say, this is the superpower that I always
No
wish
one would
I
ever do
had,
that.
right? And I'm going to sell my company, I don't care for how much, because I want to start something new because the opportunity cost of not doing something now is so big. But then really, you cannot believe their product vision is going to be the same as it was previously, where you would like maybe develop for 18 months and bring a product to market, start testing, and we've got 5 million lines of code, and we've had 20 developers working on this product. So, like, the vision is really entrenched. Now it's like you have the product vision on a Monday, you have the product on a Tuesday, you're selling it on a Wednesday. But then a competitor starts on the Thursday, and on the Friday you have to pivot. And any investor that is against that mantra, I think, is kidding themselves. So when we talk to founders now, it's like they're selling us a vision, but we know that vision is going to change. It's going to change in a week, a month, 2 months, 6 months. Of course, it's going to change because the market is knocking us around with these like generational defining models week after week. And so, coming back to the question, which was what do we look for in those entrepreneurs? Well, pattern recognition is a great thing, but their ability to adapt, right? They're going to have to adapt. So if they can prove that and they can show that in the past they've adapted and pivoted with the market, then that's a great sign for backing an early team. But it really depends on the people that are executing it, because everyone in this room can have the exact same product vision and go home tonight and code in the exact same way and bring a product back tomorrow. So we're in this like age of the great equalization, right? In software, AI native software, let's say.
Yeah. No, I cannot agree more, by the way, and this is spot on in terms of how AI has democratized the ability to build products and do a lot of things that in the past were only privy to the kind of very deep technologically advanced people. And an actual story on that, like I was speaking with an entrepreneur a week ago who built this amazing platform and who hasn't launched it yet. I was like, why didn't you launch it yet? He said, oh, I wrote more than 1 million lines of code, and I'm afraid if I put it out there, someone will copy it overnight and it has no value. So I'm, okay, then what's your strategy? Since truth is, anyone can copy any product right now in like, I don't know, a day max probably.
Right.
So what is his strategy, and that's, I think, another angle to look at it when we are looking at investment, is that he wants to build a business model and secure some partnerships and exclusive deals that would lock his kind of blue ocean strategy in a way that others who can copy his kind of product will not be able to really get the same exclusive deals because he already had the first kind of advantage with those. But that said, even that is not enough in my opinion, and that's where I go back to my previous point. We always looked at that, but now this is becoming like #1 priority. We always looked at people who came from the industry they're trying to build something in because they understand it and they had this knowledge and they know a problem that they really want to solve. Now, it's not like it's nice to have, it's a very, very must have to come from that industry that you're trying to build something in, because you can pivot, be agile, move things around, change your business model, you have the network, you can do things in a much more advanced way than anyone else, and that's what's going to make your startup thrive or fail, based on how much you can grow in that industry that you really know and you are very much connected in it.
Okay. Just to let them know, you are more interested in investing in vertical IA or just transversal IA applications? I mean, in case it's vertical, which sectors do you think are the ones who are going to be the best one for the next decade?
So I'm horizontal, so I'm enterprise, so someone else.
Go ahead.
I'll go first.
Okay, you begin then.
I think this goes back to another, not theory, I think it's also reality today. AI is going to become commoditized, or it's already commoditized, meaning everyone has access to it, and everyone can build whatever they want, however they want. What is not commoditized is, at least in my opinion, because there are a lot of debates on this topic, is more not the LLM, the large language models, but more the SLMs,
exactly.
the small language models that are very specific to certain industries. And these are the more interesting stuff because these require a higher quality data set and language model that can really build something way more accurate. There is a big debate today that says the LLM would actually take over this. I'm not sure. I think there is still a room for the SLMs to have their own niche and grow and take over certain industries, especially when you speak about healthcare or when you speak about, I don't know, legal tech or certain areas where the human judgment and historical data in that specific industry has to be extremely high quality for the output to be really good quality. And the LLMs would always average these out and lower the quality, whatever you do with the LLMs. That's at least where I stand today. I always say today because tomorrow morning something might happen and I might change my opinion. It's crazy. So I think that's what kind of I look at, those specific industries that require very high quality data sets.
Okay. And as an investor, what can you add to the AI company? Because your role has changed as well, not only the company's role. So.
Sure. Sure. So I was just about to answer the previous question. You asked me another question.
It's a better question.
You choose that.
Put you more on the spot.
Let me walk while I talk. Okay. So I was going to say to you just before that we have an unannounced deal, on an unannounced company that we're investing in, which is in enzyme discovery. Enzyme discovery, novel proteins, applying AI to chemistry. So that's like an example of domain expertise, proprietary data set, super vertical AI, right? But then at the same time, we've just invested in a company that has a middleware that they sell to managed service providers who sell into small and medium sized enterprises to allow them to orchestrate all of the AI in their enterprise. And that's horizontal. That's every small company, every small mom and pop shop. So we're doing both. We're going really into some really deep vertical stuff, but when the team is really good and the go-to-market is really, really good, we can still see a horizontal opportunity. What can we do for them?
Yeah.
What can we do for the enzyme discovery company? Less, because I am not a PhD chemist, right, with 20 years of experience. Yet, still time. But we can help them with company building, right? Company building, pattern recognition on hiring, on fundraising, on marketing, on finance. And by the way, all of those things are also changing, right? They're also rapidly morphing in the current market. So that's where we want to position ourselves with a company like that, where they're the domain expertise. I don't know more about enzymes than them, so how can I help them? Help them with the other things. And then with the person in the horizontal AI, it's all about market access and go-to-market and connecting them through to potential clients and business development, as well as the company building. The last caveat I would put on this is investors at most will move the needle 1%, right? They won't be the reason that the company's successful. They won't be the reason that the company fails.
They could be.
They
could be.
Well,
not you guys, but in general.
There are investors that can be like that.
What kind of investor, not us?
In general,
someone else out there.
They're not on this stage.
Never.
Agreed.
Yeah. It's an interesting question, right? Because I think that you and I were talking a little bit before this. I honestly think that a lot of VCs are going to die because of this, okay? Because the value add is going to be much more important. By far, right? And I think the largest of the largest are always, because they survive and they can make a lot of mistakes in terms of VCs or funds, right? Whatever. I think we're going to see a lot of niche VCs that are very good at go-to-market growth in very particular sectors. And they're going to kill it. And people are going to say, I want to be part of that crew because they have 5 hits and I want to be the 6th hit. I want to be the 7th hit. I want to be the 8th hit, right? And but that's very niche-y. That's not going to be this generic, right? So the big guys can play across that, otherwise a niche-y. But all the people in the middle right now that are kind of this, kind of that, they're going to have to pick a lane.
Yeah.
They're going to have to pick a lane in order to differentiate themselves for the entrepreneurs.
And you see these micro funds or first-time solo GPs who are raising like 15, 20, 30 million funds to invest on a very specific vertical where they have exceptional network access. And when the rounds come together, and let's pick some names like a Lightspeed or an Accel or an Index is leading the round, the founder says to them, hey, I want you to make space for this guy because he adds value to the company. The big guys, they compete on valuation, and it's like capital, right? Andreessen just raised 15 billion. We see companies here in Spain who receive term sheets from local funds like us. Let's put some hypothetical numbers on this, but 15 to 20 million on the pre-money valuation. They receive a term sheet from London. It's a 40 million valuation. They receive a term sheet from New York.
100 million.
It's a 80 to 100 million, right?
Exactly.
Each time the dilution's the same, right? So would you rather raise 3 million from the local versus 20 million from the guy in New York? So when that happens and we don't have the deepest pockets, how do you react and how do you win? It's a very good thing for a fund to think about that because it really forces you to sharpen your value proposition to founders. Like, what's your right to win the best founders? And it's something that I have to say is like, it consumes us. Consumes us.
Right, because
We're
adverse
obsessed with
selection
it.
kills you.
Yeah.
Right? If you don't get the best deals, you're dead.
Yeah.
Period.
Well,
Well, or you can be lucky, right? But if you're lucky, go out and go to Vegas instead. I'm sorry, Monaco.
No, like, I agree also with you, Ted, in terms of many VCs will disappear and the big ones will hopefully, not hopefully, they will survive probably, and there are probably more niche ones. But going back to your question in terms of like what value add VCs can bring today to an AI startup, definitely what Ross has just shared in terms of like having that access to a certain network that's very deep. But also I would double down on not just the company building, but more the softer things with the founders. Many founders are really great in product vision, but they fail sometimes to become good CEOs, and they need either to be replaced or they need to step up somehow. There is a lot of work that can be done there, and most of the times as a VC, we are seen to be on the founder's side, not on the other side. And that's because we always go very much hands-on with the founders. We think of ourselves as another co-founder or someone who's on the driving force of the startup. We don't make it or break it. We're not claiming that, for sure not. But we at least try to make sure the founders are very self-aware and they possess the right ability to grow and to recruit and to bring the right culture and to put all the right structure around building an engine for growth, not to be stuck very quickly somewhere. And of course, if we can bring that industry expertise, that would go very far these days. It's something we try to do with every startup we invest in.
Yeah, I think I totally agree. Instead of investing in a good startup, it's as if to invest in to create a good startup. It's just to make it different. No, the capital allocation has changed a little bit.
there's a difference between a good company and a good investment,
Exactly.
right?
Yes.
And we can all invest in good companies, but they'll be really obvious, and you'll be paying a really high valuation.
Right.
So to make a good investment, you need to be taking risk and
Right.
making bets. I mean,
Yes.
we always say venture capital in Spain is capital riesgo, right? And it's risk capital.
Of course.
So you have to take risk, and our LPs are giving us money to take risk. If we're not losing money, then we're not taking enough risk.
Right?
Okay, so we have only 1:30 seconds, so you got 30 seconds each if your last message to the audience, if you want to say something for these companies that are the people who are listening to us about AI.
I think one thing I would say, and I would always say that, just be very, 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 very open, because things are changing in dramatic ways and much faster than anyone can really perceive. The human brain is trained to think of stuff in a linear fashion. We are in a hyperbolic growth fashion right now with AI, and to absorb that and take it in, it takes a lot of introspection. So just be mindful, we are in a hyperbolic growth right now. We're not in a linear growth.
Lovely. Ross?
Demand more from your investors. Be strategic about who you take money from. Money is a commodity. You're looking for the friends that will tell you what you need to hear, not what you want to hear. And also, don't get scared. We're all in the same moment, right? There's so much uncertainty on all sides of the table. Every entrepreneur is facing the same set of anxiety, and you just need to be in the market, reactive, adaptive, and good luck.
Yeah. And I think that, the moment is new in terms of AI. It's really transforming everything. It's only starting to transform everything. So really, curiosity and humility are more important than ever, right? Honestly, I mean that, because even the people that are inventing this technology are only a couple of years ahead of the person who just started picking it up. Sure. And maybe not even, right? Because they may not even understand their own models, right? So everyone here in this room, or anyone who's building something, especially all entrepreneurs, have an opportunity to have not just an equalization, but to actually be ahead of the curve. So, but to do that, you have to be super open. To literally be the thing I did yesterday is not the right thing to do today, which requires this profound mind shift, right? So I think that maybe everyone needs to have a psychiatrist on board or something like this to help people with the coaching on this, because that becomes super important. But honestly, adopting the right mindset, using the AI in the way that it's going to make you just kick ass, that's what's important. And then understand that everyone else is doing this too. And so, there's no right approach. There's got to be an approach for you.
Okay, lovely. Thank you for your time and for all your knowledge that you have shared with us. Thank you.